Good morning, ladies and gentlemen. This is Butch Shorak, Options University. It's Monday, August 13th, 2012. Access to this video is for educational and informational purposes only. Nothing contained in this video website or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options. And we are not a service that tells you what to trade. We are not implying or guaranteeing any profit. What we are going to do is talk a little bit about what happened last week and what we can expect in the coming week. And as we looked at last week's economic announcements, there was not a whole lot taking place during the week. So let's go ahead and look at the week to come. As we look at Monday, August 13th, very little there as far as what it is that we expect to see out of this first week in the market as far as economic announcements. Let's go back to that slide. All right, and so when we look at that slide, what we see is that Monday, there's very little offered. As we look at Tuesday, we see that on Tuesday we got PPI on Tuesday morning at 8:30, retail sales at 8:30. And business inventories at 10 o'clock. So definitely something there that certainly is capable of moving the market on any given week. However, we've not been seeing that much influence out of the economic indicators in America. We've been seeing an emphasis on European news and China news and Asia news. And that has been news. This has definitely been a news-driven market. On Wednesday, we see that we have the CPI at 8:30. And then as we look at the rest of the day, not a whole lot there that's going to move the market. Housing market is indicated at 10 o'clock. Probably not going to have much of a move on the market. Thursday morning, we go see our jobless claims, which we see every Thursday morning. Philly Fed survey has certainly been known to move the market on Thursday. So we do have a few things going on during this week that can absolutely have an effect on the market. Consumer sentiment Friday morning at 9:55. And then at 10 o'clock, we got economic leading indicators, which both are monthly reports. As we enter into this third week, let's count them. There's the first Friday, there's the second Friday, and there's the third Friday of the month, which makes this an options expiration week. Typically, what we see out of the first 9 days of the month of August is usually a great deal of weakness. We certainly haven't seen that. Let's go ahead and take a look at the chart for the week and see where we are as far as trend. So if we look at the trend, we see we are definitely getting lower, or rather higher highs. There's a high, there's a high, there's a high, and we just keep getting higher highs all the way up, trading within this uptrend. So our trend is up. All right, and as far as lows, we're getting higher lows. There's a low, higher low, higher low, higher low, and higher low. So getting higher lows, and now as you see, we've had 1, 2, 3, 4, 5, 6 days up, and so we are in an up cycle, okay? Banging against the last 4 days, we banged against that 1406 area 4 times in a row. Now the real question is what's going to happen during the next week. So let's take a look at this in a little more detail. We see that we are in an upcycle as we are getting higher highs and higher lows. Our 30-day moving average is sitting right down here, and we are in an uptrend. So the next trend after an uptrend is a sideways trend. When will that happen? When we start spending time above this moving average and below this moving average. Then we will switch over to a sideways trend. But so far, we are in an uptrend. We are a bit overextended as while we were having little moves up, the news that we saw from around the country and around the world was basically China news and talk of the Germans backing the ECB and the such that really moved the market. When we looked at the unemployment numbers for the week, which came out on Thursday morning, we actually did beat the expectations. There was not as much unemployment filing as was expected for the previous week. So that was one positive note out of our economic indicators. But the market was moved, and it is a news-driven market, basically by European news. So what can we expect to see next week? Well, the air seems to be getting a little thin up here as we seem to be going sideways in this trading range. And if we actually looked at the volume, we see that we had a very low volume week during this move. And therefore, the air is getting a little thin. We'll have to see whether we pop above that 1406 or not. All right, with that in mind, let's take a look at the Dow and see what the Dow did during the same period of time. Looking at these days right here, we see that we had our big day up last Friday, and the Dow made little mini steps all day long, all week long, giving us a nice little candlestick, but having difficult going above this particular resistance point. So we'll see whether we can break up or whether with the low volume that's taking place, it loses its momentum and starts heading down. With that, let's take a look at the NASDAQ and see what the NASDAQ has done during the same time. See that we had a nice strong move out of the NASDAQ. Then during Tuesday, Wednesday, Thursday, and Friday, again, we had that same pattern where it kind of topped out and isn't having trouble going any further. All right, so with that, let's look at the Russell, the micro stocks, and we see that with the Russell, let's get to that slide. We see that it had to move up 4 days of the week. We were sitting in a very tight trading range. Again, not on much volume. As we see, the Russell finally broke out of this triangle, this symmetrical triangle, but is not breaking up with any great pizzazz here. And you notice we're spending time above the moving average and below the moving average. So this trend with the Russell is still what one might consider sideways. We'll need to go above this point for our breakup to see whether we're actually heading up with the Russell, as it has lagged since earlier in the year. It's been lagging for a couple months now. If we look at the overall indexes, looking at the Dow, the NASDAQ, the S&P, and the 500, and the Russell 2000, we see all of them are up positive for the week, as we see the percentages from 0.9 all the way up to 1.8 for the NASDAQ. S&P was up 1.1. And then if we look at the year-to-date percentages, we see that Dow up about 8%, NASDAQ up 16%, S&P up 11%, Russell up 8%. It's been higher this year, but it's really kind of holding its own, as here we are in August, which typically can be a weak month. Now, one of the things that we have going on this year is we have an election going on. And so many times during an election year, August can be one of the better months. So it seems like it is following that pattern so far. Be leery and careful of August, as we've had many pullbacks through the years during the months of August and September. So be careful of that bullish side. All right, with that, let's take a look at the VIX. Look like we dropped out of our trading range on the VIX. We're actually lower at 14.74 than we've been in a while. And so not a lot of fear in the market, as that market has not really had any big moves to the upside, kind of digesting this move that it's had. So we're getting a little low on this on the VIX, and we'll see if that doesn't start heading up as the market heads down. So let's see what happens during this coming week, during Triple Witching Week, with options expiration coming on this Friday. All right, with that, let's go ahead and take a look at the bonds. We see that they're trading sideways, not showing us any great strength, trading between 130 and about 123, 123.50. So nothing remarkable happening with the bonds. One is the type you might look at potential condors on the bond market, as we see that it really is trading within quite a trading range. All right, next let's take a look at the financials, and we see that the financials did break out a little bit. Notice the comparison that you can make between the financials and the Dow and the S&P, as no market heads up without the financials, with any durability, without the financials going with. All right, and with that fact in mind, let's look at our next ETF. We're going to look at U.S. oil and see that we got a little pop up in oil, and we see that it actually pulled back a little bit on Friday, unlike the rest of the market. So a little weakness showing there in oil as we switch from that up cycle to a down cycle in a basically sideways trending market with oil. Next, let's take a look at our last ETF, and that's for gold. And we see that gold came down, hit the moving average, bounced up, and actually spiked up to this resistance point as we went into Friday. Watch for a potential bearish play on gold, as if the market does begin to pull back, if it follows its past pattern, it is at resistance and will pull back to maybe that moving average again, as we see gold trading within a specific range, and we highlighted it in the yellow. And so some potential to be made on possibly the downside of the market. Watch for lower highs and lower lows for your entry. Standard entry, and determine what your stops are going to be, and exactly know what your trade is before you get into it. All right, with that, let's look at the volume this week. As we said, the volume was a bit pathetic, and you'll see that during this 5 days, we had the lowest volume that we've had in quite some time. So low volume, market moving up, air getting thin, you know what comes next. So with that, and does one really expect a breakout with that kind of volume as it's losing its momentum? All right, so with that, those of you that are gold members, stick around. We're going to look at our stocks to watch, look at how our stocks that we've been watching for quite some time, how they handled this move up in the market with this steady strength in the market during the last week, and this steady strength in the market as we've been in August. For those of you that are not gold members, thank you for being aboard. And this is Butch Shorak, Options University, Monday, August 13th, 2012. And for those of you that would like to look at other free videos, you can get the website right at the end of this video. With that, I thank you, and we'll see you on Friday morning. To our gold members, welcome back. Let's take a look at the S&P and see exactly what happened on Friday as we went into the actual end of the day. This thing rallied and closed at the high of the day. That is a bit bullish on a Friday afternoon. Picked up about 3 points in the last 20 minutes to finish right at that 1406 area, which we might call resistance. Earlier we looked at the amount of volume there. We saw that our volume was pretty low during this past week, so we didn't see it move up on a great deal of volume. All right, we did see each and every day working its way up, having a good strong day on Monday, Tuesday, Wednesday, Thursday, Friday. One inside day, which is on Wednesday, but kind of hit the wall against that 1406. But notice all your closings are higher each and every day. Now, so we've still have this 1406 sitting there as resistance. If we break through there, our next area up there is right at around 1415, 1417, and then above that a previous high at 1431. So if we get that breakout, that's what you can expect. A lot of talk, a lot of little mumbling going on about some kind of stimulus package. That certainly could shove it up. But without some kind of big news out of either Europe, Asia, or China, or some stimulus package that'll get announced during this election year, we're most likely to see this thing begin to retrace, come back down to this moving average, or right in there, or potentially to this one right here. Certainly expecting a higher low than we got right there, and so on and so forth. So, but it is a little bit thin. Time for the market to pull back, and it probably wouldn't take much of a news event to cause that to take place. So be a bit careful about the bullish side of the market, as it is time after 1, 2, 3, 4, 5, 6 up days for us to have a bit of adjustment in the normal cycles. Currently, we are in an up cycle, getting higher highs, higher lows. We are in an uptrending market with the moving average moving up, and spending our time mainly above that 30-day moving average, which we define as an up cycle. With that, let's go take a look at Apple, and Amazon rather, and we see during these 4 days, 5 days this week, Amazon just kind of went sideways, actually giving us lower lows, lower highs, didn't really participate in this rally in any way, shape, or form. Amazon, however, has been giving us good strength in this market since its earnings announcement, which took place at the end of July, and certainly has been stronger than the overall market. Just didn't participate in the last week. Next, let's take a look at Apple. And as we look at Apple, there we go. We see that it has sort of broke out of its trading range, but having difficult time going much higher, as we're up there at around that 622 area. And so don't be surprised to see Apple pulled back down. First target will be there around 600. I always have a difficult time trying to play Apple to the downside, though. But if we do have a pullback, it may pull back a little bit, maybe to this first 30-day moving average. So with Apple, we see that it has not gone crazy going up, trading in a sideways trend. Let's take a look at AutoZone. See that AutoZone, as the market went up this week, AutoZone has gone down. So if we do have a pullback, don't be a bit surprised to see AutoZone pull out of its trading range and head down further in this market move. All right, next let's take a look at CMG. Looking at CMG, we see that it also earnings change stocks. There's no doubt about it. Not the same stock that it was. Big institutional selling on earnings, which means that the accumulation process has probably stopped, and we see that we are now heading into a downward move. Expect CMG to go down and retest that previous low right down there, right around that 280 level, a little bit below that. So maybe an opportunity this week to pull some money out of CMG to the bearish side. Let's next take a look at Google, which has certainly been a bright point in the market, as we saw Google just start running way back there in July and just keep right on up through earnings and heading up to that 642 area. And so Google has been a market leader in this after its pullback. Earnings, they liked earnings, so Google is looking on the bright side as we look at the rest of the summer. If the market goes up, don't be a bit surprised to see Google continue in that upward move. One of the rules you might think about is possibly accumulating some kind of position in Google on any kind of a pullback, as we're seeing great relative strength out of Google. Okay, next let's take a look at Green Mountain Coffee. Earnings change a company. Horrible performance in the last quarter. Obviously had some good news as we see Green Mountain Coffee starting to show a little bit of strength. But look at these moving averages. 200 way up there, 50 down there, 30 down there. Definitely a bearish pattern, as Green Mountain Coffee, worth $24.43, was worth a heck of a lot more a year ago and has had a major setback for its investors. Next, let's take a look at ISRG. And there was certainly some talk about some weakness, and boy, we saw it in earnings, and we are now trading and trying to fight above that 200-day moving average. Doesn't look like we will get it if the market pulls back. Don't be a bit surprised to see this pull back somewhere along that line right there in that trading zone until ISRG begins to build up its momentum again. Once a company has bad news, whether it be earnings, whether it be revenues, whatever it is, when you start seeing this kind of selling, many times that means it's not the same stock that it used to be. ISRG not trading like it did last year. All right, MasterCard still trading in this nice sideways zone area, trading in its zone, right in the middle of its zone. Might look at something up here, something down here. Definitely the kind of company that we're looking for where we can take advantage of that. Just make sure you know when earnings are on MasterCard, as I don't see them on this particular 3-month chart. So they should, where is it? I don't see it on there. So maybe MasterCard's earnings are coming up soon, but don't see them on the chart. So before you get into this, make sure you know when earnings are and what the effect it can have on your positioning in MasterCard. Next, let's take a look at McDonald's. Looking at McDonald's, we see that McDonald's, again, a stock that went straight up, trading in its lower trading zone after earnings. Earnings were not well accepted. Revenues, obviously, were not what they expected, and forward-looking revenues weren't what they expected. And we see that McDonald's is trading in the lower part. You used to be up there around 102, now sitting there as low as 86 in its new trading range. So if we're to look at a trading range for McDonald's, we might call it from 90 to right there, and until it gets out of that zone, it is a sideways trending stock. All right, next let's take a look at Nike. Almost looks exactly the same. changes the stock anytime you have earnings. What changed those earnings? Most likely, forward-looking revenues. And as we see, in a very tight trading range, looking at a sideways trade, has closed the gap from the earnings gap, but having a tough time breaking out of that, trading within quite a narrow zone. Again, the kind of thing that you may look at for some theta decay out of the company like Nike now. All right, and looking at Priceline, we see that Priceline has showed good strength in the last couple months, as we see that it's holding its own, and Priceline is trading in its upper zone. And we see that we had earnings. Earnings look like they're. I'm sorry, this is W Granger. Let's go back to Priceline. And I don't know how I got off that chart. Let's take a look at Priceline. Yeah, it didn't sound like the Priceline story, because Priceline was severely punished at earnings, trading in a completely new zone, down almost 100 points, maybe more than 100 points. So more than 100 points, as we're going to have to see if it can rebuild its base and head back up, as it saw weakness in Europe. All right, and then finally, let's look at W Granger, a company that seems to be very stable. Earnings were well liked, revenues were well received, and we see that it's been trading in this upper zone, trading right in the middle of that zone, bouncing off the 30-day moving average. If the market continues up, you look for a higher high, higher low out of W Granger and see if you don't get something. As we saw, quite a good volume day on Friday's close, bouncing off that 30-day moving average. Look for higher high, higher low, and potential entry spot on W Granger. Well, those are the stocks that we like to cover, and we'll see how the week goes during options expiration week, which is always a little harder week to trade in. And so this is For Options University with Shorak. It's Monday, August 13th, 2012. Remember, if you're a trader, trade what you see, not what you think, as technical analysis and good trading technique give us the edge to get increased rates of return. Those are the things that we need to be a good student of so that we can say, I am a trader. Thank you.